What is up, guys? Dirk here. A quick update ahead of the FOMC interest rate decision, which is happening today. It is Wednesday, September 20th, and that interest rate decision is happening at 2 p.m. Eastern Time. So keep your eyes out on that. The expectation is that the interest rate is not going to change this decision. Basically, they're going to keep it at the same level, which is a pause. No cut expected, no increase expected. Now, what is going to be interesting, what people are waiting to see, is the talk always that they give after the decision has been made about future expectations on what their stance is going to be regarding interest rates. Are they going to continue keeping levels high? Are they going to raise them even further? Or is there going to be talks about softening and cutting potentially? And that could send the market in one direction or the other. Now, what we want to look at here is Bitcoin, which is currently sitting at 27,000, and it has been holding here for the last day or two, which is nice to see. But if you watched my video that I put out on Monday, we are not out of the woods just yet. So let me break this down for you technically with a visual. And the most important thing really that I'm watching is 28,200 as a level. I broke that down in the last video. So what we can clearly see, this is a 4-hourly chart. So what we can clearly see here is from this high in beginning of July, you can see there is a very clear downtrend at this point in time. So the price keeps on making lower highs, right? You can see lower, lower, lower. Even this one is lower, and even this one is lower than this one. Currently, we're up against that trend line. So now we're in a position where we really want to see the price get above the previous high. So we want to see it get above this level. Now, this level is also important, not just because it was this high. Obviously, if we get above there, we have a break in market structure, meaning instead of lower highs all the time, we get a higher high, which could signal the start of a new leg up and continuation up. Also, this exact level, let's call it 28.2 to be safe. That is the 3-day 50 moving average, which is very key to reclaim for the bulls. The 200-week moving average is also somewhere just around 28,000. So this whole level is a lot of resistance here, plus it is this previous high. If we can clear that and flip that and get above 28.2, and if we can stay above that with a weekly candle close, so not just a quick wick and then a drop, but actually reclaim that and stay above it, that is going to be when I flip full bullish again, because that means we basically reclaimed all the technical indicators, we got a market structure break, and that greatly increases the probability that once we do that, we continue higher, probably 32, maybe 36, maybe even higher than that over the coming weeks and months. But until we get that 28.2 reclaim, this can still just be a lower high, as you can see, and this can still roll over, and this can still go and take out these lows over here. It can take out this low over here, and you can see there's still potential for downside on this chart. And as with any major economic news or events, things like that can really just be the catalyst. You know, if they do decide to, for example, increase rates today, we'll probably see more downside. If they talk negatively about much more upside in interest rates coming in the months ahead, no talks of cutting or anything like that, again, there is potential for this. So really, to keep things simple, to keep it easy, we need to reclaim 28.2. Otherwise, I'm not getting bullish just yet. There's potential here for around 24. Say between 23.5 and 24.5 is also a key level, because we have the 50-week moving average, which is around about over there, which is important as support. It can drop below and hopefully reclaim it. If that holds, you know, then we're looking at potentially a more bullish scenario. If it breaks below, say 23.5 with the weekly close, then we have to consider more bearish downside. So right now we're just in a very tricky position here, where we really have to wait to see how this is going to play out. You know, any bets made before the time, we really don't know. It could go either way from here. If there's some really bullish news, we can surge up, reclaim this 28.2 and continue higher. Who knows? If they approve some ETF or whatever, maybe something, maybe they cut rates at today's announcement and we just see a huge surge in the markets. It is a possibility, because we also have, and I shared this last time, we have this bullish divergence here. So let me just get rid of all the clutter on the chart, and you can see we have this bullish divergence, and we have seen a bit of a bounce here as this is going lower here. With the candle bodies, we don't measure the wick. You can see over here. So there is a possibility this breaks to the upside in the same way that it did over here, right? We had this similar grind down like this and then big shoot up. This is going to be key, and we're going to see we're coming to a point of decision. So if we get rejected here, I mean, we're probably looking at, like I said, 24.5, 23.5-ish, somewhere over there. And then we have to see, does that hold and bounce, or does it break below? And here, if we break above, well, then it's looking good. If we can hold that, then we can continue higher. So again, that's all about probabilities. If then, nobody knows the future for sure. And this is what I'm looking at. These are the levels that I'm looking at. So let's see what we get at the FOMC today. And then I will update you in the next video. So thanks for watching. Smash the like button. Leave a comment with your thoughts. What do you think is going to happen? Are we likely to break to the upside and continue to 32,000 or higher? Or are we likely to break down to 24,000 or even lower? Leave your thoughts in a comment below. It's always nice to see what everyone else thinks. And I will see you in the next video.